Physical Silver Squeeze 2.0, orchestrated by WallStreetSilver. It's happening again. It's May 1st, this Saturday. There's hordes of silverbacks agreeing to buy 100 ounces, which is like a few $1,000s of silver. And then some people are talking about buying the 1,000-ounce bars, which, is 25K plus for those guys. So I'll talk about buying the physical silver, how the squeeze works. Also, at the same time, we have the AG First Majestic Silver Miner stock chart consolidating like perfectly right down into a point. It looks like it's about to do a huge bullish breakout. And then we also have inflationary signals that are good for silver going off. A bunch of hype is building again. So yeah, today and Friday, if you want to get physical silver, might be a good time. And it looks like the silver miner trades is going to happen probably today is going to be the trade entry. So that's what's up, because Monday might be too late. So like, share, comment, subscribe, turn on notifications, because silver's about to go bow. All right, let's start on the AG First Majestic Silver Miner Corp. This is one of the main silver miners. Let me go out to a week, show you this chart. All right, so I'm going to do the miner, and then I'm going to talk about buying physical silver. But there's a trade setup on the miner that I want to show right now. And this is way back to 2008. This is a weekly chart. And you can see this huge consolidation pattern. And then we get a false breakout here. And then we get the real breakout, and we ended up doing a flagging pattern on this breakout. You can see the back test here. Let me zoom in on the hourly and show the breakout a little closer. All right, so you can see the false breakout here. Boom, and then we got a breakout back test. And then, yeah, so we got a gap here on this breakout, and we came down and filled it here. And now this is pretty hot because, look, we're grinding down underneath this trend line. And so this thing, we're still underneath it now. And we'll see, today or Friday if this thing is going to blow. And then by Monday, we're going to be past the end of this thing. So, I mean, if we stay underneath this thing, it's going to take us down to who knows where. I don't know. We'll be stuck under this thing, probably back down to 12 or something if we get under here. But for all the reasons I'm going to go into in this video, I'm expecting this thing to go out to the top. But see how tiny it is? We've squeezed all the way into the tip of this consolidation area. So a breakout only has to be this big in a back test, like just tiny. And then it can take off. It can take off and start flagging, or it can go big. I don't know. Any kind of breakout is kind of good. Yeah, so that's the look. We're getting a big consolidation. It looks like a bull flag. I'm expecting a bullish breakout. I think it's whatever, maybe. I don't know. This is pretty hot, but I think this is still probably 75% chance to break out bullish. And we have a support line here, which is pretty good. So on the call options, this thing moves relatively slow. So I was looking for June or July call options, 17, 18 kind of range. Let me go over to the, oh yeah, bars, you can't get them. But I was going to show, here, there's all kinds of good stuff to cover in this video. This is my Roth IRA that I opened a couple weeks ago. I did a video on Roth IRAs because you don't have to pay cap gains. You don't have to file any tax paperwork or anything the whole time you're trading in here. You can trade as much as you want. There's no paperwork, no taxes. But the Roth is cool because when you take the money out, there's no income tax when you're taking the money out. So this is a really cool account if you have an aggressive, like high risk strategy and you can take the account real high. You don't have to pay taxes on the big dollar amount, which is pretty cool. So I just started at 6,000 last week, and that's all I have in here right now. I was trading GME. I sold it when I got trapped under the 194 again. So this is not financial advice or investment advice, just showing you what I'm doing. But anyway, that's the AG trade. Let me go look at the silver price, and we'll talk about this silver squeeze. So it's May 1st, which is Saturday. This Saturday is the physical silver squeeze. And so the general idea with a physical silver squeeze, the best way to squeeze physical silver is to buy the Comex bars. These are the industrial bars that all the companies need, that do phones and cars and solar panels and whatever. It's an industrial and a monetary metal. So I mean, they're all sold out, sold out, sold out, sold out. So the way to get those Comex bars is you have to go get futures contracts, and you have to demand delivery on Comex silver futures contracts. And so those bars, 1,000-ounce bars, I mean, silver's a little over 26, so that's $26,000 per bar, or more than $26,000 per bar. So that's for like the big guys. Those are the gorillas that are buying those things. For most people that just want to pick up some silver, this is First Majestic, which is the mining chart we were just looking at. This is the only miner that also has a bullion store, and this is like the biggest, probably one of the only miners that really just focuses on silver. Most of the silver is a byproduct metal. But I'm not sponsored by any of the companies or anything in this video. I'm just saying what I did. So I bought, right before the first silver squeeze, I bought a pile of silver from them, and they had like smaller bars available, and you could buy a bunch of these rounds. But I was filling the cart up. If you check it out, it says, boom, you can only get 3 of these things. And that's the max on all of these. So they already have a short supply, and they're already sold out of bars. These are the only things that they have left in the bullion store, which is kind of crazy. And these are kind of like decorative large coins that come in a box, so you're paying for the box as well. But like that's the max silver you can buy from this store right now, including these big proof coins. Yeah, so I don't know. I might buy some more silver. Maybe I'll do that. But anyway, this is my favorite place to buy silver coins. And so when you're buying silver coins, you're not squeezing like those Comex bars. But any silver that you take off the market requires, I mean, they make these coins out of those bars. So that does help the silver squeeze. And then if you don't want to hold physical, there's a couple things. There's a PSLV, which is the Sprott Physical Silver Trust. This is a silver trust in Canada that holds 100% of the silver in those Comex bars. So if you just buy and hold the Sprott Silver Fund, it tracks the price of silver, and when you buy Sprott, they'll buy the actual bars. So the Sprott Silver does actually help the silver squeeze. The SLV, not so much. SLV is JP Morgan is the custodian, and this is the paper silver. So the paper silver allegedly has a small percentage of the actual silver shares actually backed in silver, and so you have the risk of it kind of going bad, sort of how like Nixon closed the gold window in 1982 and just like, no, the gold's not backing it, we lied. The silver, physical silver, is not really actually backing the paper silver. And so a lot of the silver, people get really annoyed with this SLV because it's used, they just print shares of paper silver and short the silver market. So people that are holding physical silver get annoyed with this one. But it does generally track the price of silver pretty well as far as just a random thing to hold, but it does have the risk of possibly not being backed by silver when that matters. And also you're not really helping the silver squeeze buying the paper silver. So anyway, that's SLV versus the PSLV, which is the Sprott that actually is backed in silver. Let's look at the silver chart. Check this thing out. Let me go to, I don't know, a weekly. Let's look at a longer term thing. So like really long term, back to, I don't know, the 40s. Yeah, here, Great Depression. We did like a long-term bottom on silver at the bottom of the Great Depression. Silver came down on the deflationary. So the big crash pulled silver down. That's a good thing to keep in mind. Like silver can definitely crash with the market. If commodities are coming down, silver is going to come down with them. So silver is not protected really from deflation. It does well in inflationary environments. And so from the 40s until the 70s or so, we had inflation and silver did really well in that environment. And then the 80s is the famous Hunt brothers, right? The Hunt brothers tried to corner the silver market. We got this big blow off top here. And then from the 80s, we had the deflationary environment that got us to the dot-com is about here, dot-com bubble. And we continued a deflationary environment past that, but silver did a bottom and started taking off again. So we did this move, which might be a little bit of a bubble. It might be a little bit of a big flag move. But we did another pretty close to all-time bottom here coming into the COVID crash. And so we're just taking off from there. 14, 15 or something was the bottom there. If we went back down, it would be 16, 17, 18 would be kind of the long-term bottoming trend line here. But we're up, we're up at 24. Let me zoom in on the chart. So, I mean, you can see if you buy silver now, we're not at all-time bottoms. But that's not the trade. The silver squeeze is we're in a commodity bull market. We have short-term inflation right now, and we have a silver squeeze, which is taking the silver off the market and trying to force the price up. And then, we have the monetary. You see like 1/4 of all the M2 money supply, like the dollars in the world or the dollars in America, have been printed in the last year and a half or something. So like a huge increase in the money supply. Usually silver will follow that up, and we're looking for a bubble takeoff trend line on this bull flag here. Is basically what we're doing here. And then also, I mean, silver squeeze and Wall Street bets, there's big hype. So we have all those factors coming into the silver trade right now, which is making it look pretty cool, but it's also pretty slow moving. Dailies. Let's do dailies. Yeah, here you go. So you can see from the COVID crash here, we got this big bull flag, which looks like a bull flag. We did over, under, over kind of consolidation. It looks like we're consolidating above that sort of, I guess call it a neckline or something. And that's a pretty good bullish flag shape here that we're doing. And not super ideal spot to pick up silver in the middle of the range here. I mean, down here at 24, like a couple weeks ago, was pretty good. But also, if you're buying, if you're buying coins, like the government minted coins, if you want those, are going to have a really big premium. I can go back and show the bullion price at First Majestic. Here it's at the top. See, 31 per ounce. So that's almost $5 over spot right now. That's a pretty big markup for First Majestic. I've seen them have like a $2 premium before, but if they're doing that, like they expect the price to go up, or they're short supply already. Both. They're probably both short supply, and they're expecting the price of silver to go up in the short term, and so they're pricing that in already. And First Majestic. Like when it was down here, it was at like $11. I was in Singapore when it was down at these prices, and I was trying to buy silver at the, what's that shop called? Bullion Star. I was at Bullion Star in Singapore trying to get silver there, and the silver in the shops was priced at like 18, 20, something like that. Or like the government coins were like 30, $40 each when the spot was at 11. It was crazy. And First Majestic, I never saw First Majestic go below 22. So like silver dropped all the way down here, but the coins were 22, like up here at this price the whole time. It didn't go lower than that. Like the premiums were above. Yeah, it's kind of crazy. And they knew it was going to go up, and it did. It went up to that price and threw it in a hurry. So all those reasons. Silver price should probably go up soon, but I mean, this flag goes out to wherever, November, December. Like it could take a year to get to the end of this flag. I mean, we might break out sooner than that if the silver squeeze pops it out the top. You know, if we get up here above 28, like we'll probably start taking off. But just like this flag could take a while. And then if you look at the long term, I mean, let me go out to like a weekly again and just show where we are on the long term. So I mean, if we don't like bull flag and break out here, I mean, we could consolidate sideways to 2028, or maybe do like some different kind of bull flag stuff and pull into support earlier, 2024 or somewhere, you know. But you can see where the support line is. That's a pretty slow moving chart. But right now, the silver squeeze is on, and we're looking at this bull flag. We're trying to get a breakout, and we're trying to pick up a bubble support line, and we want silver to go over 100 basically. And so that's the silver squeeze idea. And so yeah, you buy physical silver and you hold it, or maybe buy the Sprott. And then the miners are a cool trade that typically go up when silver goes up, even though they're not directly correlated with the physical silver squeeze. I think, you know, I just like this chart a lot. This consolidation breakout and this flag look pretty hot to me. I like this chart. But it's also it's a slow moving kind of silver chart too, so it's not that crazy. You know, I mean, I struck at like 18 in June. That's a pretty conservative call option. But I'll be looking probably to buy more of these tomorrow if it does a bullish move tomorrow and a back test. I'll be buying that back test up for sure tomorrow. And if it breaks down under here, I'll be selling that thing off in a hurry. And so that is the look at that. So I mean, yeah, like 15. If we're down, oof, I don't know. This line has picked up support a lot. It's like 15.30 is support. If it breaks down below that, I don't want any of it. And if we, you know, if we stay above 15.84, go to 16 somewhere, that's going to be a really good area to go long on this or look at call options. All right, so what else did I have to chat about? Yeah, it's hard to find those bars. You have to get delivery on futures contracts. First Majestic has good coins. There's some coins other places too, but they're just more expensive, and these are just good quality. As long as you don't want like the government minted coins. A lot of people do like that. Here's a cool chart. This is inflation adjusted. So you can see the silver price. Well, I mean, it was like 28 cents and after the Great Depression. But there were also controls on prices and things like that back then. You can see the angled edging chart is super unnatural looking. But once you get into this choppy chart pattern, and they took the controls off, like silver just exploded to the upside. And you also just have, you know, the dollar losing its purchasing power at the same time. But if you put inflation adjusted off, then you get the price relative, you know, so the Hunt brother peak was more like 100 something. And that's kind of what we're looking for again, is a silver squeeze peak that gets up, you know, near 100 or something like that. I mean, I don't think silver goes to 1,000 or something. I mean, 100 is pretty peaky, especially if it's going parabolic. We'll see. Yeah, so let's get in and kind of chop this chart up. Yeah, so on this chart, you can see here that 2001 bottom is a pretty long-term bottom. And, you know, relative to older prices and things like that, I mean, this chart's saying like $8 an ounce is kind of like cheap silver. So silver's not cheap right now. But that's not the trade. It's not a trade because silver's cheap. It's a trade because it's trying to get squeezed and it's trying to explode to the upside. So it's more of like I guess like a swing trade than it is an investment, the whole silver squeeze idea. Because you're just trying to get silver to go way up, but that's not a price it will stay at forever. That's a price where you sell it. Unless you want to hold it, I don't know. So other people like the silver squeeze just for holding it purposes, but I don't view it that way. I'm looking at it as a swing trade. Also, I wanted to point out, talk about inflation, deflation a little bit. I'll go look at like gold charts and copper charts, because silver is like half monetary and half commodity, and you kind of get the consumer price inflation with copper, and you get the monetary inflation look with gold. And silver has both. So you want both of those happening. And then also interest rates going up, which they are right now, is good for silver. But maybe it's good for silver because what you see here is you get a bottom, and then does this have the yield curve? Oh yeah, we got the yield curve here. So you can see the yield curve here is steep, which means, like the 1 month US Treasury bonds or 3 months are right near zero. But the long end, the 30-year, is up at 2.29. So you have that spread, and it's not super steep. I mean, it is relatively steep, but we've had steeper yield curves than this, like 4 or 5 point spreads or something like that. It could get more steep, and it looks like it wants to, because this is sort of the yield curve spread chart, and this is the 2-year versus the 10-year spread. So this is an okay one to look at, but you can see here it cycles, and when it goes down here, the yield curve gets flat or inverted. If it's below the red line, that means it's inverted. If it's at the red line, that means the yield curve's flat. And then when it's up here, it's getting steep, and you can see here when it starts trending up and starts getting steep in yield curve, it starts trending up and it checks back, and that's like a recession, like every time. Like this one was weird. We got 2 recessions in a row. But you can see you go up, you check back, recession, right? You start getting steep, you start going up, check back, you're in a recession. Start going up here, you check back, you're in a recession. Start going up here, you check back, you're in a recession. So what are we doing right now? We're going up, and we're just starting to check back, like right now. So let me go back to the charts. I'm going to look at treasuries. I'm going to do another yield curve spread. I have that was the 2-year minus the 10-year, right? I like to do the 10 minus the 20. And does not work with logarithmic on. Turn the log off. Let's go to weeklies. Auto adjust. Here you go. So the 10 versus the 20, you get rid of, the 1 month, 3 month, like the short end of the curve. You get rid of the 30-year, and you're just getting the spread in between the middle, in between the 10-year and the 20-year US Treasury bonds. And you'll see the same pattern. It swings up, swings down, swings up, swings down, right? And when it's down, that means that it's flat or inverted. And when it's going up, it's getting steeper, and there's a big spread. And a big spread means more profit for banks. But on the way up is like a recession every time. So this is like the 90s recession, which wasn't a huge deal. This was the dot-com bust, which was a huge deal. This one, 08, this was the financial crisis and the housing bubble. That was a huge one. And so now we're going up and we're just checking back. So the outlook for the next 3 or 4 months is pretty sketchy where we are on this chart. And so let me go back. Oh, here, let's go back to this chart. Yeah. This chart should be helpful because you can see kind of what silver does when you get into a recession. Let's look at it. So these are recessions, these gray lines. So we're just looking at the yield curve spread. So generally silver pulls down into a recession, whether it's on an uptrend or a downtrend. Like it'll check down in the recession because people have to sell their silver to cover margin loans and to cover their losses, in the stock market. Usually the stock market pulls back in a recession. Silver pulls back. But you can see in 2008, it was a bullish run for silver, but it checked back during the recession, and then it took off before the recession was over. And so, this thing's painting a recession for us already. Okay, that's interesting. There's no recession on the other chart, but this chart has us in a recession since COVID. All right. So I don't know if we're in a recession since COVID or not here, but the stock market is definitely going up. Silver's going up. And so, I mean, we did get a little check back on silver here, but I don't know. But anyways, if we do go into a recession, if we do have a stock market crash, silver can come down with the stock market. So it's not really protected from a stock market crash. It's not like a stock market hedge kind of asset, like gold kind of is, but gold will pull down too. Yeah, I just wanted to point out where we are in the recession kind of cycle, point out what silver does in a crash. And yeah, and that's where we are. So yeah, so if we swing up to here, you know, interest rates might go up to 3.5, maybe the 30-year could be at 3.5, something like that if we get up here. And the short end seems to be pegged pretty close to zero without anyone really intervening or doing anything. And so the Fed funds rate usually is closer to the short end of that curve, but we have the long end of the curve floating up higher. And so that's kind of the look. I mean, I wouldn't, you know, the Fed is saying they're going to keep interest rates at zero for a long time, but I wouldn't be surprised if they come out and announce, you know, if we're up here on this thing in a year or 6 months or something, the Fed's going to come out and say the interest rates are a little higher than zero. Yeah, all right, so let's look at copper and gold. I think gold is still bearish, and so let me get in. So gold did this pretty cool pattern, a higher high. That's like a cupping kind of thing with a higher high. Yeah, like maybe a cup and handle. I never said that for gold, but it does kind of look like that. And it doesn't look like a double topping pattern. It looks bullish because this one's higher. If it's a lower peak, that doesn't look great, but higher peak is usually pretty good. But we're just in a bearish trend, you know, and we've had a good couple weeks for gold, but we're still underneath these averages. This is the weekly average, still pretty far underneath, not giving us much support. The 120-day average is above, and so we are, you know, underneath kind of resistance and underneath the daily moving averages. Doesn't look very good for gold. But I did draw this kind of trend line that we might be picking up. So we might be bulling, we might bull through this stuff. Gold's one to watch, but usually you want gold to do well for silver to do well. Like right now, copper has been doing awesome, and silver has been doing pretty well. But you can see here, last year gold was bulling, right? And copper was bulling. And that's when you got this huge flag on silver, when gold and copper were bulling. But this sideways consolidation has been gold's weak, but copper's still good. And copper is what, H? What are the copper futures? I forget. I have them in here somewhere. This thing, HT. Yeah. Yeah, so I mean, copper has just been like bulling out of control. It's going crazy again. So these are the copper futures. So the copper futures is a good look at like price inflation, and gold is a good look at monetary inflation. So basically, so far this year, we've been getting price inflation like, you know, commodity and goods price inflation. We've seen food prices and stuff go up like that too. People are saying that's due to a supply shock. Maybe, I don't know, but the M2 money supply is up and the prices are up, so it just looks like inflation to me. But it doesn't look super inflationary because gold's pulling back. Like we have interest rates going up, and we have M2 going up, and we have, you know, copper and consumer prices all going up. That's all inflationary short term, but gold's not. Gold's checking back, so that's the other part of the equation. That's not looking inflationary yet. But if it breaks out, then it does look super inflationary, and that would be awesome for silver, and that might happen right now, and we might have the miners breaking out of a technical pattern right now. So that's all super cool for silver, and that's what I'm looking at this week. And oh, I gotta log it. I forget to put the log back on. Yeah, so this is TradingView. I'm not sponsored by anyone, but TradingView is really cool. But if you want to draw straight lines on the TradingView chart, you need to turn on log, so it's a logarithmic scale, and that will sort of bend the chart to fit your straight lines. And then you have to turn on overnight trading, because if you turn off overnight trading, it squeezes the chart and you lose some of the trading movements. It makes a lot bigger deal if you go in on like a 5-minute chart or something. The overnight trading affects the lines on the smaller charts a lot more. Oh, and also like the lines, you have to know what scale you drew them on. Like I drew these on a 1 hour, and so they fit the chart on 1 hour. But like this, the big lines I drew out on a weekly, right? So like this huge consolidation back to 2008. This thing all fits weekly, but I gotta go into the 1 hour to get the lines on this breakout here. Yeah. So anyway, that's TradingView. And what else relative to? Well, let's just look at some other stuff that's going on. There's some other cool trades going on and stuff. But that's the silver squeeze video. Now I'm gonna look at the S&P and some other stock trading charts. So the S&P, we've been bulling up this bull channel, and we had the strong dollar checking us back. And I've been saying like the dollar's strong, so be worried about stuff because strong dollar is dangerous. And it wasn't that dangerous. We had like a strong dollar and inflation at the same time. So like Europe was printing more than America, but it didn't. I was thinking we were going to pull back like down here with a strong dollar. But from here we got a weak dollar move. Let me show you the dollar. Yeah, and we just broke out again to the upside. Let me show the dollar. I'll come back and give targets on the S&P. But yeah, so this is the dollar since January back here. January we did a bottom, and then we got this W, uphill W, double bottom. And that is a bullish formation, and we did take off to the upside. So I was calling for dollar bull stuff, and the last few weeks, I mean, we really went weak, like straight down, like two straight. That's crazy. I can't keep doing that. But now we've coiled underneath, and we've done another move down. So this move after this coil is my first move where I'm like, we are actually making a bearish dollar move. But I mean, we did something similar here. We coiled under, and then we shot right back up. So give it the rest of the week kind of to see if we're going to stay weak or what the dollar's doing. But this is threatening becoming actually bearish as far as I'm concerned right now. And so a weak dollar is really good for silver. It's good for the stock market. A strong dollar starts becoming risky again. Although you can bull with a strong dollar, if the dollar's like exploding to the upside, that's really dangerous for the market. So yeah, anyway, that weak dollar move corresponds with this breakout right here to new highs on the S&P. And so we have this little bull channel here that we've been in for a few months, 4 or 5 months, 6 months, something like that. So every time we get to the top of this little bull channel, it gets dangerous. I mean, we hit it here and we reject down, straight down to the bottom. We've hit it, back here we hit it, and we rejected way out of the bottom. Like we really, really rejected out. And this was on a strong dollar that we rejected out here. So that is definitely something to keep in mind. I'm losing power. There we go. Alright, so now we're on a weak dollar, but we'll see if we get up here and start testing the top and we see the dollar get strong and gets dangerous. Like it can pull across the channel in a hurry, and it can break down through the channel on a strong dollar. Like this crossover is on a weak dollar. Like it dropped all the way across the channel here on a weak dollar. So it's not really crazy to drop across the channel when we hit the top of it, and that's just coming in at 42.30-ish range. We'll be hitting the top of this thing, and we could be pulling back, but we could potentially try to break out at the top of this thing on a weak dollar, in which case this is the real zone where I'm looking for really like the top of the stock market, where it really reverses into a bear market. I think would come in the big bull channel. Let me get out to a daily chart. So this is our Volmageddon in 2018 and the late 2018 crash. This is the COVID pullback. But if we go back to 2008 here, you can see that we've been bulling up this channel since the 2008 crash, and never once have we tried to get out of the big bull channel here. And now we're getting real close to the top again. And so I don't know. I mean, I think we're either going to try to pull out and hit it early. Let's get back into an hour. I mean, I think we're either going to pull, you know, if we bull above this channel, we'll go up and hit it early, and that'll be super dangerous. And then there's a little bit of support in that case because we gotta get back down through any of this stuff before it could get bearish. So this is a more bullish and kind of easier to trade potentially scenario. And then like the more annoying and kind of dangerous scenario is we just bull this channel up. It will take about a month and a half to just bull up this channel. And once we've bulled this channel, what am I running out of time here? Oh, I can't go farther forward, but that's okay. Once we get up into this thing and get past the end of the little channel, then there's just really nothing underneath. It's a really, really strong resistance and very little support underneath. And that would be maybe July or something. We could get, into this kind of area, which would be super dangerous. And we have a little bit of support, 36. We have good support to bounce off of a 32 or something down here. But I mean, the stock market could go from 44 to 30 fast. So that's kind of and not that it has to do that, but there's a big risk of that happening once we get up here. I mean, we could bull out of the top of this thing. I mean, we bulled out of the top of everything during the dot-com bubble. It could happen again, but there's just a huge risk area when we get here. But for now, it looks like weak dollar. It looks like we're bullying the channel. So we might have another month or two of bullish stuff. But just keep the risk in mind. Like, this is pretty good resistance. This is huge resistance. And if we break down, it can get dangerous. So I'll keep updated on all that stuff. But that's the general market. Bitcoin popped. It's kind of holding. It did a weird stab to like 56, and it's not looking super strong, but it looks like it's kind of holding this 54 level for now. So we'll keep an eye on Bitcoin. Like, it's rolling. It's looking weird. So there's still downside risk on Bitcoin, but it's probably going up. And then we have some meme stock trades, and so this is the thing I'm looking for on GameStop is a bubble trend line that can take us through this 194. And so we did a little flag and a hop today, and tomorrow I'll see if we pick up another hop here. I think we might hop like in here tomorrow, or Thursday, I guess today, and that could take us through here. And once we get support through this neckline, GME could actually take off. That's the thing I'm looking for tomorrow, and of course being super careful if it breaks down underneath that. We're kind of past this consolidation channel now, and so if we don't find a support line and we do break down kind of below this 165, that could get, well, there's moving averages, 160 and then 126 down here. That's kind of the downside look on this thing being kind of a false breakout. But I don't think it's a false breakout. I think we're going to actually go for a run here just because of this crazy consolidation here. It's a similar consolidation to what silver just did. And AMC is doing a very similar thing. And AMC maybe picked up a line today. AMC has a few hops across this channel and out. That may be as low as AMC goes. I think this may be the pickup for AMC to start bulling. And cost, yeah, same kind of thing, a little breakout. And maybe picking up support, same kind of chart. So yeah, we have meme stocks and the silver miners kind of doing that. What else? Oh, FCX, somewhat related. It's sort of a mining stock. This is like a basic materials and minerals and mining sector company that has a bunch of different operations. And they've just been blowing it up. And this is a sector that should be strong even if like tech or the small caps or the S&P are kind of acting weird. This thing could be safer and stronger than those. This has been a big momentum leader in those sectors. So I like this stock a lot. It's related somewhat to silver, more on the commodities side. And what was I gonna look at? I forgot. What are treasuries doing? TLT. Oh, they broke down. Oh, okay. So yeah, treasuries have been doing a counter move for a couple of weeks, and it looks like they might be breaking down, and we might be making another move to higher interest rates, which would drive the treasury, like the TLT, down again. I think we're probably doing that now. I bet we go like this. Boom. I bet we go right here. Yeah, so that's inflationary breakdown. That's probably good for silver. Oh, the silver junior miners, right. So I was going to say, let me get out to like a daily, I think, on this one. Yeah, so this is doing a similar thing as the general silver price is going. Like, this is not really helping the silver squeeze much. And these silver juniors, it's a bunch of sort of dangerous stocks that don't necessarily have reliable silver mines or anything like that. And I don't particularly like, I don't like this chart better than silver. I'd rather have physical silver than this thing. But also, if you want to go find a junior miner, I wouldn't be looking for, like an ETF that has a bunch of miners in there. Like, you gotta go do your due diligence. You gotta find a miner that has like promising deposits and maybe has some momentum on the stock already. And, you're kind of swinging for the fences and gambling with that kind of thing. Most of them don't have call options available. Most of them trade on like the Canadian exchanges, and you got to just buy and hold shares. I don't know. I probably should do some more due diligence on the juniors and see if there's, like a junior miner chart that looks good and has good mining deposits and good management and has call options available. I don't know if there's any of those, but I know AG has all of those things, but it's not a junior. Uh, it has good management and good mines and good momentum on the stock, and it has call options, but it's not a junior. So like a junior that had all of those things could have an even bigger upside, but I don't know of one off the top of my head. But this might be a good week to figure that out. So I'll look into that stuff. I don't know if there's anything else going on. These are the other short squeeze stocks. So Tesla's just kind of consolidating. It had good earnings, it beat earnings, and then it came down off the good news, which is not weird. That's pretty normal for stocks to just do whatever they're going to do regardless of earnings. ARK has like a little consolidation thing going on, and it has a false breakout. I think ARK looks kind of scary, actually. ARK could do a breakdown move. Yeah, if we get a breakdown here, I might be trying to short this guy. Tesla, if the whole stock market gets in trouble, I think Tesla could kind of be a big down move. But we'll see. We have another week or two before we kind of get to the end of this consolidation. We'll have to see which way Tesla breaks, because I think we might have another month or two before the stock market's getting into trouble territory. But who knows? Like, maybe we go hit the top of that little bull channel, this tomorrow, and maybe we start getting in trouble sooner than I think. I don't know. But definitely, things are way up in risky territory, and so I definitely have short trades that I'm looking out for. But like the meme stocks and the silver and stuff are long trades I'm looking at. Tesla and ARK are short trades, maybe. Yeah, anyway, that's the kind of stuff I'm looking at. Bitcoin's long. Yeah, just pretty much ARK and Tesla I'm just kind of spying as like maybe potential short trade setups. I'm not super thrilled about them on the long side. I'd much rather get like FCX or something, or any of these short squeezes. The short squeezes are getting all the momentum right now. IWM has been interesting. It's done this really weird consolidation pattern, rolling top. Like this looks dangerous. It's holding up for now, but if it starts breaking down, this one could look scary soon. So this is another one to watch. The S&P is getting to a kind of dangerous spot. This one looks weird, but it's holding up for now. I'm not looking at this long right now just because it's been acting just weird. Like this thing's not a bull flag. This thing's weird. It's scary looking. So, potentially like a triple top thing, or like the long-term reversal top where you go sideways, you do the roll, then you kind of consolidate above it to the downside, that kind of look. It kind of has that kind of look, which is what Tesla was doing just a minute ago. Let me go in on like the hourly and show that thing. Like that's the reversal top shape that Tesla is kind of doing, right? Doing so sideways. You do the rolling top, right? Consolidate above the sideways thing, bang, downside. So that is not a shape I love to see. It looks like IWM's doing it right now. Oh, maybe oil was doing that too. Oil was doing weird stuff. Yeah, my uranium stock turned red and disappeared. I'm not sure what happened there. I was gonna look at oil. Oh, oil's bulling. Okay. Interesting. But I was thinking oil's kind of doing that same kind of thing, like a sideways thing, like a rolling top. Now we're kind of consolidating up here. That looks like it could get dangerous. But it looks like it's breaking out to the upside. So forget I said anything. Let's take another look at oil in another day or so and see if we get a bullish breakout here, because we might get a bullish breakout on oil. And I'll say the exact opposite of that, what I just said. So yeah, that's probably enough stuff. That's a lot of stuff. What is LODE is like a little minor. This chart is just crazy. I don't know what this thing is doing. I mean, we have support like way down here. Yeah, forget about that thing. Alright, that's probably good enough for now. Yeah, so I'm going to think about maybe buying some more silver right now before it's all sold out again. I mean, pretty much just have today and tomorrow, because Saturday is the big physical silver squeeze that everyone's kind of agreeing to do on Wall Street Silver. I'll do that in the intro. Enjoy, happy trading, cheers.